The JSE have extended gains in mid-morning trade. The rand slipped on Wednesday as focus shifted towards U.S. jobs data for clues on the Federal Reserve's future interest rate trajectory. The rand is currently trading at 18 rand 16 to the US dollar, at 22 rand 98 to the British pound, and at 19 rand 6 to the euro. Gold is trading at $2,642 and platinum is at $952 per ounce, while the price of Brent crude oil is up at $73.80 a barrel. Today's market analyst is Viv Govender, who's a portfolio manager at Rand Swiss. Viv, always grateful to be speaking to you, and thank you so much for your time. Perhaps let's just recap a little bit and go back to South Korea, and quite a dramatic turn of events there. And now we are looking ahead to the December, I think it will be on Friday or on Saturday, to find out what the courts will decide. What did you read as the situation at Rand Swiss?
Yes, I mean, we always think of South Korea as being quite a stable country, something similar to Japan, just because of the fact that it's had such a meteoric, economic rise. And we know the companies like Samsung, Hyundai, and so on that are these South Korean, global behemoths. But if you look at the history of the country, it's been a much more volatile, much more troubled history than you would think. In fact, it's like recently, it's like 40-something years ago, I think 1980, they had a government crackdown on protesters that killed maybe as many as 2,000 people. And we've seen, the exception in South Korea is for the president to retire and just like leave office like normal. The majority of them have, retired, been imprisoned, committed suicide. There's even been one sentenced to death recently. It's been a very, very, turbulent political situation, at least at the very top of the South Korean, political spectrum. Even though this is a bit of a shocking event, given the history of the country over the last 20, 30 years or so, one must not be too surprised by just some of the craziness that can happen in South Korea. I mean, like I said, this is a case of a country that has a very, very volatile history.
Yeah. Let's come back home, Viv, and recap from major data from yesterday. We saw the GDP unexpectedly falling in the third quarter, dragged down by the agricultural sector. What do you foresee, or what's the outlook for the last quarter of the year? Do you expect that we will see agricultural sector still struggling, or can it regain some ground and we add a few more points to the GDP in the last quarter?
Yeah, look, I think the agricultural number was a big disappointment that came through. Agriculture is not the biggest sector in the country by any means, but the fact that the fall was as large as it was, we're talking about most sectors up a few percent. This thing was down, over 25%. And obviously, even though a small sector falling that much is going to have a huge impact. But I must be, reminding listeners, or viewers actually, that, in terms of the expectations around agriculture going forward, we have to be prepared in a world that's having more climate change, more weather uncertainty, that the things like the drought that caused this particular pullback are going to be more common than we previously anticipated. If you had to look back at the history, like the last 50 years or so, and say this is what's going to be expected for the next 50 years, that's not the case. So even though this is probably a short-term blip, I think longer term we're going to have more of these blips are turning up just because of the fact that climate change is a reality, and we're going to see the weather not behave as stably as it has in the past.
Another development that came out last night was Moody's decision to affirm the sovereign's long-term foreign and local currency debt at BA2, maintaining a stable outlook. It did note some chronic challenges that have been posed by, things like reform progress and that could fuel social risk. What more do you think the government needs to do over and above what it had committed in the medium-term budget statement to give assurance to rating agencies?
Look, I mean, you need to get our growth rate up. That's the major issue in South Africa at the moment, is our growth is very low. And Moody's said that, they think it's going to be low going forward as well, unfortunately. So expectations of a big recovery in our GDP numbers are not, unfortunately, there. One thing to be noted was that they thought the strength of our central bank was quite important, as well as our judiciary. So institutions in South Africa are quite strong. I mean, there's no things that saves us from replicating what we've seen in other parts of the continent and other parts of the world as well. I know where places like Turkey or Nigeria and so on experience quite big fluctuations in their currency. South Africa has not. Though we in South Africa often complain about the rand weakening, but compared to, like, for instance, Turkey that, has weakened by, many multiple times over the last, say, 7-8 years, or a Nigeria that has, more than dropped into like 50% value in the last year or bit. Those kind of moves are not something we see in South Africa, and that's obviously due in part to these Reserve Bank stability, as well as the other institutional issues we see here. So the main thing the government can do at the moment is, I think, get growth rates up. I don't think we are experiencing, any fears about overspending, at least not overspending on a reckless way, or in a reckless way. I don't think there's any issues with the institutions. It's mostly about the growth rate in the country.
Yeah. Tiger Brands released their results today, and they are reporting a 4% increase. But I can't help to wonder about this Listeriosis lawsuit cloud that continues to hang over them, and how, once it's settled, it may change their books in future.
Yeah, I mean, apparently, according to the company, they may not get compensated by the insurance companies if in certain kinds of negative verdicts against them. So if they do have punitive costs put against them, which is reasonable in this case. I mean, we're talking about people dying, for the food-related product, and when people die, there needs to be some significant kind of pushback on that. In that scenario, I think they may not get the insurance compensation that they want. But it must be noted that the share price over the last year or bit is up 70% plus. And even in that environment, with these results, the share price went up again. So these results were, like I said, slightly better. We're not talking about blowing the lights out, but the fact of the matter is the market is looking at them very positively, which is obviously an indication that and they're seeing good size in them for the future growth of the company.
Yeah, and just lastly, Viv, the consumer confidence index released by the FNB and BER, it went down, it edged down in the last quarter of 2024. But I like what FNB says, noting that there's going to be a much more different look when you look at the fact that load shedding has gone down. You look at the two-pot retirement withdrawals, etc. That the picture might look different in the first quarter of next year. What are your thoughts around the consumer confidence index that was released earlier today?
Yeah, look, I mean, load shedding is obviously the big thing, and I've seen those report, I think, by 91 a little while earlier, today or yesterday, where they talk about the fact that more than half, about 3/4 of the weakness in the rand has been due to load shedding, and the fact that we haven't seen it for 6 plus months.
Yeah,
should be positive. I do think that we are seeing a lot of positivity coming into the market. We've seen the stock market run up on this news. We've seen the rand being stronger on this news, but we have to start seeing some of these positive signs like no load shedding, etc., translate into better economic growth.
Yeah.
Regarding the two-pot system, I think that's a temporary measure that's going to have a bit of confidence in the market, just because people have a bit more cash in their pockets. But longer term, I do wonder about the impact it's going to have on people's retirements, because they are taking money out before they retire, and they are not going to have that money when they do retire. And if you had kept money in the stock market for, say, 10 extra years or whatever, the improvement you're likely to see from that would probably be much better than you'd have, for instance, having the money in the bank account or anything else. So the fact that you're taking money out of a very strongly growing instrument and taking it out early, it helps in the short term for consumer confidence, but longer term, I think it's probably going to do more harm than good.
Yeah. Viv, thank you so much. We always appreciate you making sense of the markets for us here on Point. I've been speaking to Viv Govender. He's a portfolio manager at Rand Swiss.